So, for example, I find the best advisors also to be investors.
Now, most people wouldn't have bought it, right?
That's right.
Right?
Yeah.
Okay. But this is something that most people wouldn't have bought. So why did you buy it? Describe what you've bought. It is a shit box, and why it's potentially gold for you.
Yeah, I think it was just because of the yield for me. There was a bit of equity in the deal on purchase. We did some renovations and added some value.
Where is it?
There's 2 in Gisborne and 2 in Hastings that we purchased.
Right. And before we start, did you buy it sight unseen? You just did the numbers. How did you find these properties?
I didn't travel down there.
So that's the first thing, right? That's the first thing that most people think you've got to go into the market to buy in the market. So explain how you found these gold deals.
Well, I do have some really close contacts who do a lot of these deals in these areas. And so I share those contacts with my clients as well. So in short, my whole life for investing has been in Auckland. And I do a lot of research in the specific suburbs and why to buy, and I'm more erring towards capital growth and or development projects. And so I really needed a rebalance. And so instead of me relearning these suburbs and areas and cities outside of Auckland, I employed the services of someone who is an expert in that area to help find me.
Okay, stop you right there. Now, how much did that cost you? 15K?
It's didn't cost me anything up front.
Okay.
Yeah. So
because this is another thing that people are scared to spend a little bit of money. Like I'm just going to say $15,000, which in the scheme of things, for some people, that's a lot of money.
Yes.
Right. But reality is long term, if it's a 5-10 year plan, this is chicken shit money.
Yeah, it is.
So how have you been able to find this in funders?
So the way we refer consultants and property finders. Property finders essentially receive money from you up front and go and specifically work for you on your behalf. They're really good for people that may not be the best at running the numbers, may not be confident with making negotiations, may not be in a position to do things without guidance. A consultant, however, does this day in, day out, and specifically has products tailored for investors. They purchase them, they take some of the risk, then they look to on-sell it prior to settlement. And so if you know your numbers and you can run them correctly, you look at the equity gain at the beginning, but also the cash flow. And if it works for you, you can pick that up for no money up front. They just take the margin on the on-sell.